What do you do about a cap rate deal? And what's the best way to handle those types of properties? That's what we're talking about today. And what I want to do is break it down for you as best as I can. All right. Hey, I'm Tim Diesel. I'm a commercial real estate consultant. This channel is designed to give you tips and strategies in your investing business. If you're a broker, this will definitely help your clients. Okay, so we're going to get into it. I have a lot of clients sometimes, and maybe sometimes I haven't worked with them before. But it'll be someone, maybe they've heard about me or they get a referral from a friend. It could be a number of different things. They find their own property and maybe it's a 5 or a 6 unit or a 10 unit building, whatever. They'll email it to me and they'll say, what do you think of this property? And before I can give them an answer, I gotta ask them, what are you trying to do? Because a lot of investors, they'll find something and they'll think, okay, this is a really good deal. I'm gonna get a good rate of return. And there's no game plan. Like there's no structure, which is not good at all. You need to have, if not a 5 or a 10-year game plan, that's not what I'm talking about. You gotta have a reason. Why are you buying this? People don't just wake up one day and say, let's just go investing in real estate. That doesn't make any sense. You need to have a plan. You need to have some kind of map or something you're doing. This is why I created this little PDF download for you on my website. It's free. Download it, check it out, and see what you think. I don't send you a bunch of spammy emails. This is for you to map out where you're trying to go, what you're trying to do. And there's the reason why I designed the whole thing. But getting back to this. So you find a property and they'll contact me and they'll say something along the lines of, well, Tim, this isn't really a cap rate deal. You can't really base it off of those numbers. And that's fine, that's understandable. I see what you're trying to do. So for argument's sake, let's just say there's a 10 unit building and we're gonna keep numbers nice and simple. 10 unit building, it's gonna be $1 million. And maybe there is no value add play, right? You're gonna hang on to this thing and you're getting a good rate of return, whatever that number is for you. Maybe it's 7%, maybe it's 10, whatever that number is. You get into the deal and that's fantastic, that's good. Well, you've got to ask yourself, how long are you planning on keeping this thing? And the number one question is always, who's managing the property? Because if I'm not managing the property, I'll take a lot less of a cap rate and a lot less of a cash on cash return on my money, because I'm not doing any of the work. So who really cares? If I'm doing all the work, those percentages have to go way up for me to even be interested. And there's a lot of things you really want to do and you really want to evaluate. So if it's not a cap rate deal, what kind of deal is it? It doesn't make sense to me. But again, you're looking at something and it catches your eye and you want to go in there and maybe you're not going to clean it up and fix it up or whatever. You're just going to buy it and you're going to keep it as is. And you're going to keep it running for 2 to 3 years or whatever amount of time you decide that's good. What's your exit strategy? If you're not going to hold it forever. I know people say, I'm just going to hold on to it for... That's absolutely not true. And I've got so many people, they tell me that. And before you know it, unfortunately, someone's wife dies. They get moved somewhere. Something happens. Something always happens. Don't ever guarantee you're going to hang on to a property for the rest of your life. That's absolutely not true. It can happen. It happens all the time, but it's just not likely. There's too many things, too many unknowns. So prepare yourself for different outcomes, right? So you're buying this property and cap rate, I've explained in a previous video, doesn't really matter too much, right? Because if the property is 7%, a 7% cap assumes there's no debt on the property. There's no financing at all. Most people don't buy property that way. So that really doesn't matter. What is your strategy for getting into this thing? And if the cap rate is like 3%, well, people that are saying that are usually brokers trying to sell you the property, and they're saying, well, it's not really a cap rate deal. You're going to buy a 4 unit at $150,000 a unit, which kind of doesn't make sense at all, right? Anytime you go over 5 units, you've got to start using the commercial model. 4 units and under, it's very difficult to use the cap rates and all that stuff because bank financing is different, and that's kind of what throws everything off. You can get residential financing on 4 units and less. 5 units and more, you cannot. So you almost have to use the cash flow evaluation on the property. And if you don't, you're making it difficult on yourself. So the biggest takeaway I want you to get from this is, what's your plan? You're looking at a property, and I get this a lot. Well, it's not a cap rate deal. Whenever someone tells you it's not a cap rate deal, you need to start asking, what kind of deal is it? Because where's the outcome? How are you going to make your profit? So your first plan is, what are you planning on doing with it? All right. Now that's assuming you've already answered the first question, who's managing the property? That's always number one. Who's managing the property? If you're not managing the property, there's not going to be a super high return for you most of the time. If you're doing all the work, you're going to get compensated a lot more. So look at these properties, look at these evaluations. This is really important because right now, the way the market is shaping up, the way I'm seeing these properties come on the market, they're really overvalued. And if you put too much debt on it, you're going to get yourself in a lot of trouble because you're not preparing and planning multiple exit strategies. The exit strategy of, let me just hang on to it forever, it can work, but I'll tell you, when 2008 or 9, when the market was dipping, there was a lot of investors that I know, the bank called back their loan and they didn't do anything wrong. They were paying their mortgage. They were making the cash flow, but it just depends on how much liquidity the bank needed at the time, and they called their note. Well, that wasn't expected. I'm not saying that's going to happen again, but that's something you could not prepare for. So when you're getting into a deal, look at everything. Don't just look at cap rate. And I've mentioned it's irrelevant. What are you looking for? Maybe you have $100,000 to invest and you want a 10% return on your money. You want 10 grand. What if the cap rate is 3% and you're making your 10 grand? Does that seem like you hit the bullseye on your deal? Or is that not good enough because the cap rate wasn't good enough? So figure out what you're trying to do. If you want a deal that's going to last 2 years and you have a construction buddy who's going to help you get it over the hill, then hey, that's when you're going to make your profits. That's not a problem. Some people can sustain a negative cash flow for a long time until they find a tenant, until they're doing whatever the case is. So this isn't just for multifamily investing. This could be used for retail. I know a lot of people that get into these retail centers right now. A big box store has left and it's vacant for a while. So they're planning on sustaining that negative cash flow for a year. You can do that and you can definitely turn things around, but just plan out what you're doing. And I hope that was a better way of explaining it for you. Hope that was helpful. All right, guys, like this video, subscribe to this channel, especially if you found this information useful. Please leave me comments, ask me questions. I'd love to help you. Thank you so much for watching.